Eric Muathe with Muathe.com. Just want to take a quick look at gold here, and we have an opportunity here to see how the stock might respond, or the ETF might respond, now that it's coming to the primary line that connects this line here. The reason why it's primary is because this is a multi-year low in gold on the RSI corresponding with these price lows. Alright, actually you could actually even draw it based off the low here. Use this most recent RSI low and draw a trend line that should look something like that. It's the same trend line pretty much. The key here, in my opinion, is we have to be very careful here if we are long gold, because a break of that trend line, and remember it's a primary trend line because it connects to a primary low, which is this closing low that goes back to more than 3 years. So a primary low trend line, or a primary trend line, is a trend line connecting a major low, and because this was a major low in gold, any trend line break of that is responsible or is connected to, I'm trying to say, the lows here, any trend line break, or you can even draw it this way, any trend line break here would be serious. And so the reason why I want to make this video here is before any potential break, is so we can observe it and learn from it. Also, we can see here that you can also use the recent trend line in the price for any break, because a break of that trend line is also relatively a primary trend line because it connects to this 52-week low. Hope that makes sense. And if you go to most recent pullbacks in gold, you'll notice that once it made this low here, which was a 52-week low, it tried to move higher, but subsequently it would come and break this trend line. At this particular point in time, this was a primary trend line because it connected to the lows here. And of course you can see that once we broke through that, we had relatively huge drop, and also the RSI was making a fresh low. So you can see that any trend line break that is primary tends to lead to a major drop. So what I'm saying here is, after a nice move in the gold and the metals over the last 3 months or so, this movement here, because of that movement, which is a good move, now that we are approaching a potential to break a primary trend line, and keep in mind that the RSI right now is trading at 52.73 on the daily. So be aware that this daily chart suggests that at any point in the coming days, should we break below 52.73, that would suggest that we are gonna see a huge drop. That drop, potentially, if it happens, would coincide with a major trend line break here and here. Those would be levels you want to be out of the instrument, because it would suggest a big drop is imminent. At the same time, if you're bullish on gold, you want to insist that this line holds right there. Right? That line needs to hold. Now it's important to understand the context of why I am saying we watch this daily chart. The context here is on the monthly, and this is all data monthly for the GLD, that this trend line break here in 2013 or late 2012 has really brought gold off the highs of 2011. We've never been back to those levels. And so we've been watching this level here because I have been saying that the RSI is suggesting that around here we might see a major pullback. So the monthly chart already showing potential to crack, and so if the monthly chart is accurate, then definitely this daily chart is gonna break the trend lines we are talking about. Also, if you take a look at the 2-year weekly for the GLD, it's important to note here that we've been making an improvement here in price week to week, but the RSI did not necessarily make a new high. That's not good. And there's something else here I need to point out, is the fact that if we take a look at how the RSI on the weekly has responded, it has failed on all these occasions to move above the critical level of 69.1 on its weekly chart. So that is also a negative in my opinion. You have failure to move above 69.1, and you also have negative divergence. So if you take a look at the weekly, the monthly, and potentially what the daily is saying, the risk is elevated here for gold to pull back and pull back significantly. I've been pointing out to you here that the level to watch here is 120.54, because should gold come and trade below that level, that would suggest a failed breakout. So watch that 120.54, which is the previous weekly closing high, because if gold drifts below that level, then the breakout here is going to be a failure, and potentially we are going to be setting up or setting down for lower prices. For the record, let me share with you where the instrument itself, the gold instrument proper, is trading, and we can see here that it is trading right now, trading with the GDX and the gold instruments. Gold's trading at 1268 and the GDX trading at 24.51. We shall see how things go, but here more than likely the risk is pointing to the potential for some type of a major pullback in gold, and more so if it moves below 120.54. All right, let's keep the conversation going. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. E-A-C-S.